Now we do our percentages. You see on the right, we have our target weighting of each percentage. So at the top, at 35%, we have gold with our GLD ETF. Remember, we increased gold to 35% the other week because it was the only thing going up when everything else was going down. Right? Gold was the only thing going up. So got scared, had to increase it even more. And now I'm pushing the upper limit of what I originally wanted this portfolio to be, which is fine. I can adapt. That's no problem. Originally, I wanted 35% to be the upper limit. Now I'm thinking 40% probably going to be the upper limit. So I'm going to sit at 35% at my high with 40% as the absolute height. Right? So before it used to be 30%, which was the highest I had gold for a long time, and 35% would be the upper limit. Well, now when everything else was crashing, gold was the only thing going up, I had to protect the portfolio. So I had to increase my allocation of gold. So now it's at 35%, and I'm looking at an upper limit of 40%. Doesn't mean all 6 of these assets could possibly go up to 40%, but gold's a relatively safe asset, historically, especially over thousands of years. So I'm okay with gold being up that high. Number 2 here, second one, commodities. We have at 15%, utilizing our USCI ETF. Next, we have US dollar at 15%, utilizing the UUP ETF. Next, we have stocks at 15%, utilizing the RSP ETF. Next, we have bonds at 15%, utilizing the GOVI ETF. And last but not least, we have Bitcoin down here at a meager 5%, utilizing the IBIT ETF. Bitcoin's been doing very well recently, not this whole time. Recently, he's been doing very well. And I keep it low because the volatility of Bitcoin relative to all these other classes is stupendously higher. Right? So I can't risk having the Bitcoin allocation too high because it could drop really fast. Right? Just like the stock market dropped really fast a few weeks ago. Right? But Bitcoin would be worse, historically speaking. Relative to the performance of the market, Bitcoin's drops much further, much faster. All right, so here we go. Let's get into our weekly percentages for week number 40. So gold down 0.42% for a market loss of 76 cents. Gold has been giving back some of its historic gains that it's been gaining. And you'll see that on the charts. This thing is broken out. It's crazy. So it's actually just giving back some historic fucking returns. Now that it's crashing, it's giving back some of its historic returns. It's got to cool down a little bit. We have commodities up 2.76% for a market gain of $2.09. That's pretty good for commodities. Commodities are starting to come back. And perhaps this is not just inflation fears anymore. This is tariff fears with the prices of everything possibly going up and inflating some of these assets. So we see commodities going up. We have the US dollar up 0.34% for a market gain of 26 cents. Dollar's been shit for a little while. Now it's starting to come back up just a little bit. So I don't know if this is temporary or not. We're just going to wait and see. We have stocks up 2.82% for a market gain of $2.10. So this is a good rebound for stocks. Remember, the S&P 500 sold off hard, went down to like from its peak down to the low to like maybe like 18% drop, and then came back up. Maybe it's sitting around, I think 13% from its all-time high. We'll get out our measurement tool and check that. But stocks coming back just a little bit. Bonds up 0.97% for a market gain of 73 cents. So a little bit of a comeback on bonds. We'll see how they're going to do. And then Bitcoin, here's the good one. In 1 week, up 12.46% for a market gain of $3 on this little IBIT ETF. Interesting now, this past week or so, to see really the only assets coming up consistently. It's Bitcoin and gold. And I know people love the narrative of Bitcoin is digital gold. I don't buy that bullshit. Gold is gold. Bitcoin is Bitcoin. That's it. All right, that's it. I don't care what anyone says about that. Gold is gold. Bitcoin is Bitcoin. But for whatever reason, the market has been rewarding those two asset classes relative to these other ones. So gold has been going up, although it gave a bit of a pullback this week, and Bitcoin's been going up. I don't know why the market chose those two assets, but they did. That's all I'm saying. GLD, our gold ETF. Look at this spike. So this come down right here where it broke above our green trend. This was April 3rd. Come down to April 8th, and look at April 9th all the way to April 21st. So I kind of want to measure that out. So let's go to the bottom right here and then to the top right here. So 14%. 14% over a 15-day period. So gold just rallied hard. So they see this little bit, we're pulling back. See this little bit of red right here, we're pulling back. So this is why you see a little bit of a sell this week. But remember, zoom out, at least zoom out till October 2023. Look at this chart, up and to the right, 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 right? And then it broke out of this fucking trend, just smashed out of this trend. And the gold volatility is also high. And I showed this in my video last week. I made like a little short video so people can just look at it if they don't want to watch this whole long video. Gold volatility was even high, but it was the volatility from people buying. Volatility works both ways, buying and selling, right? Buying and selling. Typically, when you see high volatility, not all the time, typically you'll see a lot of selling. It's people like trying to get out of their position. But this was from gold buying. So that's why it's so volatile. So I think it's going to correct. I think it's going to come back to this trend. My hope is, otherwise we have to change it, but my hope is it gets back in this trend and it continues to go up. But I don't know what's going to happen. We're going to watch it and find out. But at the very least, this is the gold trend from October 2023 till today. Up and to the right. This is why we're at 35% gold right now. All right, gold is just a phenomenal monster.